on TV, online, and on your smartphone. This is Ticker News.
This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk, and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Hi, I'm Chris Judd and this is Talk Your Book, and today very lucky to be joined by crowd favourite Tom Lambeth from VP Capital. Tom, apologies for my voice. I sound a little bit like RFK due to a cold last week, but thanks very much for coming back on the show.
Pleasure to be here.
You've got a track record that's enviable on Talk Your Book, Tom, and I get a lot of requests, so we appreciate you coming on. But for those that haven't heard you talk before on this platform, talk us through a little bit about VP Capital and how you guys look to invest.
Sure. So VP Capital is a long-short fund established in Melbourne. We're focused on global equities, but probably specifically, Australia, ASX-listed equities. So we've been around for almost 7 years now. And
what stock did you want to talk about today?
Aristocrat.
So it's sort of been a market darling, Aristocrat, hasn't it? It's one of those stocks, you look at its compounding annual growth rates and they're just so solid and predictable. For those that aren't familiar with the story, maybe give us the top-down view of what they do and what their three business divisions are.
Sure. So it's been a business that's been around for 70 years, founded in the 1950s by Len Ainsworth, which is well known, and it's really a business which has built pokies games and machines, and sold them to pubs and clubs, and then casinos in Australia, and then via a series of acquisitions ended up worldwide global domination. So at the moment, that's around half the business. Historically, it was 100%, and then in the 2010s, management then diversified the business into digital online gaming. So at its core, they're really a game developer, and then they talk about this Omni Channel where they push those games through the pokies machines, land-based gaming, and now online through digital.
And it feels like Aristocrat Gaming, whilst the core of the business is perhaps the less exciting part of it, but maybe before we get into the other two divisions, for those that don't play a lot of pokies, myself included, there is a lot more skill to the game development than perhaps people would think. Can you talk us through what that looks like and perhaps how sticky the customers are when they do find a game that they like? Yeah,
sure. So I think they talk about spending. They call it D&D in this industry, but it's basically just R&D. And Aristocrat spend around 13% of their revenues on game development, which tells you how important it is. And so this is really investing into games such as War of Clans and these types of games, which people would know of. Some are mobile games, some are pokies games, as you say. There tends to be often teams of people dedicated to this that spend many years developing them. And
once you've got a game that is really popular, what's the expected life of that game?
It really depends. So some games have been around for years, anywhere up to sort of 10 years, and then there'll be sometimes like a different iteration of that game. So you might have the first one and then it'll be called number 2, number 3 and so forth. And we've seen that. And game studios worldwide have followed this model. So once you hit gold, you tend just to keep on pressing on that until it runs out. Yeah.
And in terms of the regulatory environment, it's obviously always a bit of a contentious space. How's that looking, particularly out of the US where their core business is?
Yeah, so it's interesting because one of the reasons why we like this business, Chris, is US gaming, as you and I have spoken about offline, is just going nuts in terms of demand. It's a bit like we saw sort of sports betting and wagering, in the US a few years ago. We think it's on a path to deregulation, and so, with that framework, you've got 7 states currently that have deregulated iGaming, and then meanwhile the entire country's still got land-based casinos still operating. So it's a very ripe environment, I think, for growth, and we're seeing to talk about the two divisions. You've got land-based gaming pokie machines, which is growing at single digit, but then you've got digital, which is growing at kind of 25% per annum, which is the part that I'm excited about and why we own the business.
And let's dig into that. Let's talk maybe through the sort of the real money gaming digital offering and the social gaming, what the difference is between those two and how Aristocrat play in that space.
Sure, so there are broadly two umbrellas under digital. There's social gaming where you don't really play for real money, as you say, and that can be via a mobile app, via sort of a freemium model, or it could be just for a standard casino where I can never redeem the money. I can just deposit online, buy some tokens and play for fun. And so Aristocrat, through Pixel United, they call it, or one of their divisions, operates in that space. They bought a business called Big Fish, and in the 2010s, which is pure social gaming. Separately to that, you've got real money gaming, where you can play for real dough, and they bought a business called Neo that specialises in that division recently this year. So those are the two divisions. I think together, they're quite high growth. I think real money gaming RMG is higher growth than social, because the experience is people want to play for real money. So you're seeing in the United States, social gaming is allowed through most of the country. It's operated from a regulatory perspective on a state-by-state basis. There are very few states that block it. Washington's one, which is an issue, but most states allow it. Real money gaming, on the other hand, is not allowed in most of the country in the US. But I will say there are 7 states that allow real money gaming, and so this is the growth area. So you can imagine if 7 grows to 20, 30, 40, 50, then we're at full penetration. And so that's where you're seeing enormous growth. And so DraftKings, as an example, operate and it's mainly in the Northeast. They sell an iGaming product, and as I said, it's growing at 25% year on year. We think the total market size is potentially north of 100 billion GGR in the US, just for iGaming, and that doesn't include things like sweeps or crypto. So it's a massive market.
And they've announced a strategic review of their digital assets. What do you think that could entail? Do you think there's a potential where they'd separate their social gaming from their real money gaming assets?
Yeah, it's an interesting one. It's really a sort of a management consultant's dream, I think, looking at this one. The social gaming has been lower growth, I think, than the RMG. As people have realised they can play for real money. I think particularly the newer generations, where they're now having access to all these products online. So
we were talking off air before. I mean, it's just almost unfeasible that in 20 years' time, people our generation or younger will be sitting in front of a pokie machine, pushing a button, playing a game, when all other trends in that sort of entertainment space have been to do things in private with an iPad or a TV or a computer screen.
I think that's spot on. You're going to have casino resorts as a sort of integrated resort, but beyond that, I think you're right. It's going to be this migration from land-based gaming to sitting in a dark room playing pokies at a club somewhere versus on your mobile on the train or at home in your living room. I think that's spot on. The other reason, actually, what's worth touching on why we like this business is, and in particular the social and the RMG side, the digital side, is you've got no capex. You can really, you can test the product through your digital channels quickly and easily, whereas before you need to spend the capex, make the pokie machine, launch the game. It may win, it may lose. It's a superior model having digital, which is about half their business now.
They talk very much about being Omni Channel too when they create new content. What does that look like in practicality between the different divisions?
Yeah, I think if you're a game developer and you come up with a great new game, you can push it through your pokies channel, your land-based channel, which is fine. It's slower growth, but the demand's there. Or you can push it through your digital channel to test it. If it's successful, you can kind of spend the capex, and so it kind of works. There are some synergies between the two.
And is there a correlation between things that work in based gaming and then things that work digitally?
Absolutely. I mean, there are demographic difference. That said, I think younger people tend to be playing more online, more on their mobile, versus maybe some of the land-based spend. So yes, but there are nuances. We generally like the model. I think one thing I'd flag though, as a risk is I do think they need to focus just being on a game developer and provider and just focus on making good content versus becoming a DraftKings, becoming a platform, which is just a very different business model and requires expertise in marketing.
Generally a lot more cash burn to get to that stage before you become a real cash generating machine. Is that fair?
Yeah, I think that's right. You need and also just you need payments expertise. What's my fraud, my chargebacks, my gateway fees. It's a different business model. What's my ROI, my CAC? What are my channels? Versus just focusing on creating a good game, consumer preference experience, and then selling that game just for someone else to worry about directly. So that's what we hope that the Aristocrat will sort of focus on and continue to focus on.
And Aristocrat Interactive is albeit tiny at this stage, but they do talk about the iLottery business unit quite a bit. Talk us through that and maybe what the growth profile could be for that down the track.
I think that's interesting, this one. So it's a new division. They bought a business called Neo, as I mentioned, for about 15 times EBITDA recently. And that business is really in the real money gaming side of things, and that comprises, it's a game studio which sells to platforms like DraftKings. It's an iLottery software platform which sells to state lotteries in the United States, and it also is it plays on the theme that lotteries in the United States are becoming migrating from sort of your shop fronts, your retail distribution, to your online iLotteries. And right now in the US, there's around 10 states which support iLotteries, but there's 47 which support your traditional retail. So there's a lot of room to grow. I think what they're doing is smart, and because it's real money, you're going to get higher growth than say just social. So I like it, and I think they're making the right move there.
In terms of broader views on gambling as an industry, I've heard it said before, in high inflationary environments, even if it's not necessarily CPI inflation, but monetary inflation in asset prices and stuff, the desire to gambling goes up because people feel like they're not going to get where they need to be anyway. Do you feel that's sort of something that you're aware of as asset prices and inflation drifts higher? It does provide a bit of a tailwind counterintuitively to the gambling market?
I think that's right. You could probably say the same thing for crypto in a way where there's an entire generation of people who maybe are speculating or gambling on things, and it's worked out well, particularly in some markets. If we're talking about crypto, I think in gambling it works that way. It tends to be more defensive as well during recessions. Particularly pokies, it tends just to be steady over time. So it does have some attributes that we like, some very sort of defensive attributes, which we think warrants maybe a higher multiple. And if you look at their multiple, you can say it's trading on somewhere around 22, 23 times forward earnings, which is obviously above market. And so either the growth is higher or the risk is lower. Maybe it's a combination of both here. And
just paint a picture for people just how consistently they have compounded that growth, maybe revenue and earnings over the last 4 or 5 years.
Yeah, I mean, as you say, originally it's been a market darling. So it's now at 6 billion top line and 1.5 of NPAT, which is staggering because only a few years ago it was sort of half that. So they've managed to grow it quite consistently. I think that's off the back of acquisition, it has to be said, as well as organic. And going back to my original point, I think the organic growth in the core business is actually quite boring, dare I say.
Yeah.
We expect it to be single digit. It is single digit. Whereas the growth in the digital side is 20% plus.
And in terms of catalysts, what can lead to a re-rate in the next 3 to 6 months?
I think it's execution of this RMG strategy with the purchase of Neo. I think watch this space to see what else they do, whether they stick to core game product provision, or whether they go into the platform side, which I'm warning against. I think RMG is going to be a huge space. It already is, and I think also watch for maybe what they do on the strategic review side with the social gaming assets, whether they can potentially sell those or do something with them, and then sort of focus that capital on either return to shareholders or I think we'd like to see further investment on the RMG side.
Brilliant as always, mate. Always love getting your thoughts, and thanks very much for coming back on the show.
Thanks, Chris.
Thanks for watching Talk Your Book. We're back to do it all again this time next week.
You're watching Ticker. We'll have more in just a few minutes.